James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Markets in Asia followed on from markets on Wall Street and lost ground amid doubts about progress in the development of drugs to tackle the COVID-19 outbreak. Stocks on Wall Street turned negative towards the end of Thursday's session after a report showed a potential vaccine had failed to help coronavirus patients. The market's sensitivity to any news about the medical treatment of coronavirus reflects the growing unease about lockdown and the realization that lockdown, and especially social distancing measures, will need to be in place for, if not all, then most of 2020. We can expect anything that points to the virus staying with us for longer to be met with downside in stock markets. Business activity has been hit hard and shows no signs of picking up as lockdown continues to hit every aspect of every economy. Data out of Europe and the US yesterday showed that production, supply chains, and most importantly spending is dangerously depressed. The news comes as the House of Representatives passed another $480 billion stimulus package for the US economy. This takes the overall aid packages introduced by the US government to well over $3 trillion. This comes on the same day that European Central Bank President Christine Lagarde launched a scathing attack on EU leaders. The ECB president said that leaders had done too little, too late in agreeing aid for the Eurozone economy. She also warned that the lack of action could well now see GDP in the Eurozone fall by 15%. It comes after the EU agreed a €2 trillion financial fund, but yet again delayed the release of any detail until the summer. There is no doubt that the Euro and the European Union are fighting for survival. The Euro bloc has shown itself to be wholly inadequate in dealing with a crisis, as it can be said that the Eurozone has failed to recover properly from any of the three major crises it's already faced in its short life. The anti-European sentiment growing throughout Europe. There are set to be some challenging times ahead and tough questions asked in the coming months. Yesterday's initial jobless claims showed that more than 4 million Americans have claimed unemployment benefit in the last week, and that more than 26 million have now lost their jobs in the last 5 weeks. There are aspects of the economy that will be hit just as hard, but unemployment is key for an economic recovery. The numbers worsen with every week, and with every week, the economic hole grows deeper. Oil markets continued their fragile recovery, jumping up a little, around 3%, to post some positive numbers. However, we know that unless demand picks up, oil markets will remain depressed, and futures markets will have a similar fallout to what happened with the May contract. For Friday's session, oil will be a focus, as will be US data out of the US and earnings out of the US, but we will have that aspect of investors not wanting to take too much risk over the weekend.